I'm Matt Bishar with REIT.com here in Chicago for REITWeek 2013. Joining me is Laurie Hawkes, President, COO, and co-founder of American Residential Properties. Laurie, thanks for joining us.
Thank you, Matt. Good to see you again.
It's certainly been a very busy year for your company. I think the most logical place to start is with the IPO. Can you talk a little bit about the timing of it and the market response so far?
No, we were very pleased with the timing, especially given current market conditions today. I think it was well executed, well distributed. We pulled in a host of dedicated REIT buyers and long-holding players who we think are long-term permanent capital. We raised $287 million, priced at a stock price of $21. And that was in fact, and the timing went well. It was a shortened roadshow because we had enough interest to move in price. It followed on the heels, however, on some other activity we did since we've seen you last. We actually did an offering in December for another $148 million as a follow-on 144A, which was well received within a 5-day period. And in January, we executed on a debt facility, initial tranche for $150 million, with an accordion feature to go to $300 million. So we're in a position to have dry powder in terms of our capitalization for up to $1 billion. So we're very pleased with that. We also have moved into 11 states now, up from the 4 in the sand states we were at when we spoke with you, and are very pleased with the progression and the volume.
And last year when we spoke, the whole concept of owning and managing single-family properties was somewhat new. You know, since then there's been a lot of new activities, new entrants in the market. What does increased market competition mean for your company, and what sets you apart? It's
a huge opportunity. And so there is some increasing competition. There are markets such as Phoenix where house prices have gone up. We consider that great, considering that's about 41% of our portfolio. And continuing, we're still getting very good yields. While gross yields may have compressed somewhat, our net yields are still extraordinarily strong because you manage the operations. And our operations after 5 years have only gotten that much better in the face of competition, which can't say they've had the infrastructure and platform. The opportunity is huge. I think you know it's $2 trillion estimate. We expect there's going to be other flow from the foreclosure business, which will be probably another $2 million. But there's also extraordinary consolidation opportunities. And having public stock and access to debt, which we've had now for years, puts us in an extremely good position. And what sets us apart is we are internally managed. We're the only publicly traded, internally managed REIT in this space. We also have an independent and highly accomplished and experienced board from the public sector. Most of them, all of them have public sector experience. And in fact, the 5 years of operating history.
And lastly, what keeps you up at night regarding the continued health and recovery in your sector?
Interestingly enough, this is probably one of the few sectors that, whether the market is coming our way or not, we're in a very good position. If the economy continues to grow, house prices continue to appreciate, we believe the underlying net asset value will be reflected in the stock price. We still see very strong growth in terms of rental demand as more and more homes go through the foreclosure process, but also as we found some of our existing tenants are looking to re-up year after year, and that's predominantly in our Phoenix Fund 1, which has been in existence now 4 years. But importantly, if the market doesn't do well and the economy falters, it bodes very well for the rental business because people then are not able to better the economic position, save the requisite down payments necessary. And so we think either way, the rental markets do well and are really of the mind that given that where we are headed as a society between ownership and rentership, that it's highly probable that we'll be probably in the low 60s in terms of ownership, which puts us at almost 40% in terms of rentership. The demand being huge, we think, for what would be capitalized by institutional equity and managed professionally will provide, I think, an ever increasingly attractive option for rental housing for the American public. And there is plenty of opportunity to go around. If you look at the amount that has been raised today, even if it's, let's say, $15 billion on the institutional equity side that's gotten so much press, that's a mere 120,000 houses. And since the housing crisis began, we've seen anywhere between 5 to 6 million houses entering the housing stock. So we represent probably less than 2%, leaving a lot of room for growth.
Laurie, thank you so much for joining us.
Thank you for the opportunity. Appreciate it.
For more on this and other REIT news and analysis, be sure to visit REIT.com.